7:45 now, about 45 minutes before the opening of the stock market. As the new year begins, investors have been thrilled with Wall Street's performance in the past several months, but it's not about where Wall Street's been, though, so much as where it's headed. And some thoughts on 2024 now from Ernie Burns with Burns Financial. Good morning to you.
Good morning. Good morning.
There's in about, 45 minutes, there's a big jobs report that comes out that people are looking at.
Yeah, and basically over the last year, jobs have been very resilient, and it's kept the market up.
So the concern that investors seem to have now, and it always seems counterintuitive, is they don't want the jobs report to be too robust because that could cause the Fed to hold off on lowering interest rates?
It could. In addition to looking at 23, which was a great year, the Dow finished up 16, the S&P finished up 23, and the NASDAQ finished up 40. There's been some profit taken lately. We're seeing a very robust year right now. We're going to see a very good year.
So what are the trends for 2024, you think?
24 looks basically, whereas the Fed's had captive 23 with inflation, as long as the economists look at the reports of companies basically having profits and the economics and the inflation keeps going down, and when they start cutting rates, we're just going to see a very bullish market for 2024 overall.
The big jobs report, as we mentioned, will be sometime here in the next 40 minutes or so, maybe sooner. Yesterday, the Bureau of Labor Statistics pointed out that job openings are at their lowest level in almost 3 years. So it doesn't, on the one hand, you get kind of conflicting signals, don't you?
Yeah, but as long as they stay resilient, and the American consumer has been very resilient, including spending, that being a factor, it's looking very, very, very bullish year. I was reading an article yesterday from a couple of different analysts looking at 2024, and U.S. Bank portfolio manager said it best. Elections, and it's a big election year, don't have as much effect on the market as economic trends and analysts in the sense of profit taking.
The kind of conventional wisdom in a lot of the business publications earlier in the week was, the Fed will start cutting interest rates by March. And then by the end of the week, the analysts were saying, and some of the Fed governors, I think, were saying, don't hold it there. You're not looking at, one cut after another, are you?
No, you're not. And but we really don't know the future. But here's the thing. At first, they came out late last year where we're stopping interest rate hikes, and now we're looking at maybe future interest rate cuts, and the market jumped, and we enjoyed a nice little rally. Then they said we'll probably maybe have 3 to 4 cuts. By the end of December 31st, they said maybe 5 to 7 cuts. Well, the Fed's pulled back on that, and now we see a little reaction. Are we going to get this soft landing for the economy? I think we've already had a soft landing.
You think we have?
I think we're in it right now. We've had a soft landing. It's continuing. That's why the jobs report's been so strong, resilient. Spending still has been very resilient. That being a factor, we're in a soft landing. There won't be a recession. That's another reason why the market's positive. It's set up for a bull market because inflation's going down. Interest rates will going to start reducing over the next year, in addition to the resilience of the job market and spending.
Okay, well, we'll see what the numbers say when they come out. Ernie Burns, thanks.
Thank you.